Do you think Oklahoma would be wise to gradually eliminate and get rid of the state personal income tax?
Yes,
Why?
I really do. I think it'll lead to a lot faster growth for Oklahoma. You've been a very good performing state, so don't make me say you haven't been great. You have been, but you still have a ways to go to be really superb. And the one thing that you don't have, you don't have the ability to get through with low tax rates. That's what you really need is your income tax is your primary deterrent to economic growth, further economic growth. And the thing is that, with that economic growth, you really do bring the revenues in on all sorts of other levels.
Some concern by people, skeptics saying, well, lower income tax, get rid of the personal income tax, property tax, sales tax is going to go up.
Well, as a share of total taxes, obviously will, and I think they will go up, but not because you raise their tax rates, but because you have more sales, you have more people moving in, property values rise, which is what we all want.
So you think it's possible they can, without raising the sales tax rate?
I think they could easily do that. I think local governments, which does not share in the income tax, will be a major beneficiary of the faster growth. So local governments will have more revenues without having anything else offsetting. And if you look at our state thing, in which, I've done all this in all the states, the state one will have some reduction in revenues relative to what it would have been. But their growth will more than offset that.
And some plans talked about getting rid of some of the income tax deduction.
Oh, they do. I'm sorry, I should have promised. What you do is you lower the rates and you broaden the base dramatically by getting rid of deductions, exemptions, exclusions. There are two parts to the proposal I've gone through. One is the reform of the income tax right away, by lowering the rate and getting rid of all the deductions, exemptions, and exclusions. That's pretty close to revenue neutral. Then they lower the rate on this broad-based flat tax. They lower the rate slowly over 10 years until it goes away. I think it's by 25 bips a year. So it starts off at 2.5% and goes down to 0 over 10 years. So it's not like it's a sledgehammer coming at it.
So basically down like a 3% rate.
2.5. It gets down. Yeah, it gets down to 2.5. By getting rid of all the deductions, exemptions, exclusions, that drops the rate down. And then you reduce it 25 basis points a year for 10 years.
When you talk about getting rid of all of the deductions, are you also talking about deductions on retirement or Social Security or interest on mortgage payments?
I don't know which all the deductions. This is their proposal. It's not mine. But I don't know what they are, but they are revenue neutral to where they come down to the 2.5%. That's where it comes to.
And it's all in this report, more specific.
Yeah, it surely is. The specifics, this is my analysis of it. I don't describe all the details of it that would be in state legislation. I don't do that. But yeah, it's and we have so many examples. You look at those 11 states that introduced an income tax. If you play the film backwards, that's all I'm describing to you is, would you like to be Michigan? Would you like to be Ohio? Would you like to be Pennsylvania? I looked at West Virginia. Now, West Virginia's always been dirt poor. And they put the income tax in, I forget, 1967 or so. They're so poor when they put it in. They couldn't get worse. But they did. They actually became dirt poorer. It's just incredible how much damage is done by the income tax. Now, when you're looking at your neighbors down here to the south, Texas, how do you compete with them? You're not competing with them, to be honest with you. They're winning. You're going to look at Missouri. You're going to look at Kansas. They're going to get rid of their income taxes.
What does
South Dakota, Wyoming? Nevada. You've got some stiff competition in this world. You're doing really well. You just need to do a little bit better to keep ahead of the race.
What would that mean for Oklahoma if Kansas and Missouri go forward with eliminating their income tax? And you've got Texas sitting there to the south. We're sort of, I guess,
your prosperity does not depend upon their despair. I have been working with Sam Brownback, as you know, in Kansas, and they have had this rivalry with Missouri from the beginning of time. And I've been working with the Show Me Institute in St. Louis, run by Rex Sinkefeld, who was a former student of mine in Chicago. And he got rid of the city taxes. Well, didn't get rid of them. He prohibited any new cities other than St. Louis or Kansas City from ever having an income tax, and they have to then every 5 years reaffirm it by a vote. So that to me is pretty cool stuff. He's proposing doing the same thing on the state level to replace the income tax with the sales tax. What I'm suggesting is that they get together and try to do a joint economic region tax, which would be really smart. I believe that your proposal is better than either of theirs. I did that proposal for Fife-Symington back in '91, where we tried to get rid of the income tax in Arizona with no offset. Now, when you look at it, Arizona was growing like Billy O for those 5 years before Fife got indicted and then convicted, and then the process stopped. I mean, it was over. But it really does bring jobs in. And especially if you know that if you pass it in legislation the way you're thinking of doing it, if you pass it in legislation so I know what the tax rate's going to be 5 years from now, I'll be much more inclined to come into Oklahoma than if I had to have fresh legislation every year. So I think it makes a lot of sense. You know, it is your choice. I'm an outsider, and you know, I'm just telling you what I think is best. Here's my California book, which was University of Chicago Press, and I'm taking that up to Jerry Brown, who's one of my dear friends. I worked with Jerry since Prop 13. Without him, we never would have had Prop 13. We never would have gotten rid of our estate tax. We never would have indexed our personal income. Jerry Brown's one of the best governors in the United States. He's got a real tough haul in there with the Assembly and the Senate in California, but here's all the evidence for him to do what's right, and he's trying real hard. You guys have so many advantages over California in your legislature, and in the initial conditions that you currently have are so well set for, the last hit it out of the park, Babe Ruth, wasn't it? And it's all here. If any of you want to, every single one of the things I went through each of those taxes and looked at all the states over all the years. You can really see what works, what doesn't work. The right to work, seeing how much you pay people on welfare makes a difference. It really does. You go on and on and on. And I told you about Metzenbaum in Ohio, but it's shocking. In Tennessee, we have about the lowest number of deaths in the nation per 100,000 people. Well, wealthy people deaths. They all leave and they take their houses with them, they take their wealth with them, they take their jobs with them. And you wonder why Tennessee is such a poor performer for a zero income tax state. You can't use this, but I referred to the estate tax in Tennessee as the scat in the punch bowl. No matter how good the punch, no one's going to drink it. Let me give you what I'm working on in Tennessee. I got this for Tennessee too. God, I do. A year ago, they extended Bush's tax cuts. Remember that legislation? They extended all the tax cuts for 2 years with one exception. The estate tax. They had a 35% rate for the next 2 years, but they did increase the once-in-a-lifetime gift from $1 million to $5 million. Now, Tennessee is one of 2 states that has a gift tax. Connecticut's the other one. Tennessee's exemption per year is $13,000. So if you lived in Tennessee and you decided to take advantage of the federal once-in-a-lifetime that's going to expire of $5 million, you would have to report that as a gift in Tennessee. You get to deduct the $13,000 you're allowed to. So you'd pay tax on $4,987,000, which would come up to $462,000 in Tennessee taxes. Would you move to Florida for that money? In a heartbeat. And they wonder why everyone leaves. And the size of ours, and these are all the data there. I'm not, I hope you guys get a chance to look at this. And, we have so much information to be able to make good decisions today.
Why do you think governments do pass taxes when you have the state that says anytime you pass a tax, the economy?
Well, sometimes they don't like the results, and they wish they could control. It's like dodgeball. taxes are like dodgeball. You know, if the other guy never moved, it'd be sort of easy to win. You'd throw the ball right at him and you'd get him. But unfortunately, people do move. And in fact, the real problem is they move just when you throw the ball at them. And you know, how do you play this? And it's not obvious to these people. I mean, that, you know, if I raise taxes on rich people, won't they pay more? Well, no, Warren Buffett doesn't pay taxes. Now, why doesn't he pay taxes? Because he knows how to play the system. All of his wealth and income comes in unrealized capital gains, which is zero tax. And then the stuff he does have, he gives it to the Bill and Melinda Gates Foundation and never sees a tax. You know, people do that. And so you've got to treat the world the way it is, not the way you wish it were. And that's what unfortunately is not as easy as it sounds.